All right, Josh Brown's best stocks in the market. The spotlight is shining brightly today.
Let's do it.
On?
Well, we talked about energy in the A block. I think we did a pretty good job of covering the fact that those stocks were going up, and I want to show you one. This is Exxon Mobil. Most of you have heard of this name. Here's what's happening. There are some stocks that move very quickly back and forth. They're in an uptrend, they're in a downtrend. And then there are like oil tanker stocks that it really takes a lot for them to change direction. But once they do, they could run in that direction for a long time, and you want to be on the right side of that trade. Exxon Mobil has been consolidating since 2022 around these levels and is now hitting the upper end of that range. $125 per share would be the real trigger. I'm actually making the case that investors can anticipate that breakout getting long here. I think you're buffered to the downside by two things. Number one, the dividend yield. But number two, very low expectations. This is a really interesting scenario, Judge, where the fundamentals for Exxon are now bottoming, will be improving in 2026 based on what management said on Halloween when they reported earnings, and the technicals are lining up at the same time. So this is a company that returns a ton of capital to shareholders. They've gotten very efficient with oil prices down here where they are for an extended period. God forbid they get a little bit of help from the commodity price side. Now that they've got their costs as low as they are, this could be an upside surprise after upside surprise situation going into 26. I think it will break out, and I think this is one of the best stocks in the market for that reason.
I would add that even though crude oil fell out pretty hard, below $60, refining margins are improving drastically, and diesel margins back to 2024 highs. Those are really great for names like Exxon, also into names like Marathon Petroleum.
But Exxon is the one that you choose out of the group.
Yes, we own Exxon. It's a core holding of ours, right outside the top 10. It's starting to wake up a bit. I see myself potentially leaning into this into the end of the year.
They also have a growth catalyst here with the Golden Pass LNG business, which they're partnered with the Qataris on. But this is export LNG, which is obviously a growthier business than just refining or exploration. But there's like a lot of things happening here that have been overlooked by the market because nobody wanted to talk about energy stocks and be in them. As I mentioned, the sector is starting to outperform. And as that process takes place, people will look at the blue chip names within the group like Exxon and maybe even do a double take on how low the expectations are going forward.
Even SLB's off the lows.
So I want to say in our portfolio, in the equity income strategy, I've got a 21% exposure right now to energy. And part of that's because that's where I can find
big dividends.
Yeah, big dividends. But I also have it in there much more strategically. And the strategic play is, as there's data center build, this is an area that I know for sure will benefit. And so, Josh, when you're saying 2026, I think the story for energy will be far longer than that, maybe the next decade or so. There's a great book by Dan Yergin called The New Map. And one of the things he says is, as we enter the next decades, we need every bit of energy, however it's generated. We need every bit of solar. We need every bit of wind. We need every bit of oil, gas, everything. The pipelines and the energy companies are going to produce it and bring it to those. This is one place you're going to make money.
Well, can I throw one more name in there?
Better be quick.
Kendra Morgan, to ride off what she says. Yeah, we're about 7% energy. I love that name. 40% of the natural gas that's consumed in the U.S. goes through their pipelines.
Okay. Yep, they've got 79,000 miles of pipelines.
We're going to have to leave it there.
Thank you, Ross.
I thought we made that obvious, but